Let's turn our attention back to the market today. A nice rip happening. Alan Nuttman, Chief Market Strategist at Bullseye Option, putting the bull into bullseye. So, Alan, you've been looking for this market to bounce back. You think we're heading back to those highs?
We're seeing a turn up in tech, and I know we've talked about Apple, AMD. They've had AMD had a nice push here. So let's see if we can extend it. Now let's remind ourselves we're still up 15% on the year in tech and almost 20% in the S&P. So the markets are strong and they've been resilient. The VIX last week had a nice decline. It's down I think 40% in the last month. So things are set up once again, and now we're in earnings season to give us that catalyst. And you've seen the numbers from the banks over the weekend, last week anyways. Wow, there's money being made.
Okay. Now, Alan, the one you're looking at today, though, with all this excitement of juicy growth trades like AMD and Tesla, you're looking at Intel. Come on, Alan.
Hated stock is 20% off its April top. So now this stock looks bad enough to buy. Everybody's given up on it. It's been, a red letter stock for a long time now. It's actually unchanged in the last year trade versus the NDX, the Tech Top 100, which used to be a big star, up 25%. So look at this chart, my friend. 50 to 60 now for 4 months, trading completely sideways. I'm seeing some smart money flows into this stock as it's making this bottom base. A breakout targets 70. And if you look at the action for the year, it's been between 45 and 65. So this 55 right here is a very important midpoint pivot that we could push above and get this thing on the move.
Okay, so how are you looking at it? Where do you want to be in here, Alan?
Option play, again, the low of this range is 50, so I'm looking at a January 50 call, and that's trading about 550 right now, and it's in the money, obviously. We're trading about 54, so it's $4 in the money. The expiration break even on that is about $1.50 higher. It's got more than 90 days, more than 3 months of time. And the January option is only 50 cents more expensive than the November option. So, there's a lot of positives here. And we see a move back up to 70. This option, is going to do very, very, very well. And that's the idea. The move in the underlying produces big gains in the right option. And that's what we do here with these in-the-money call options as a stock substitution strategy.
Okay. And you're quite in the money here. I mean, $50, we haven't seen that level since January. And about $4 in.
I be long from 50. I'm pretty comfortable with that level. I have the right to be long from a level that we haven't seen since, like you said, January.
Yeah.
You could put in a limit order and say, listen, I'll buy it if it dips down to 50, or you could buy the in-the-money option. It gives you the right to be long from 50, and that's the strategy that's been very successful in this bull market.
All right. Intel needs to get a move on, though, because we also haven't seen above 55 since July. It just fell asleep. It went stagnant. It's comatose. Is there any reason you think it's going to wake up, Alan, or is that just going to be the market dragging it?
Well, I think it's going to be, we got momentum here eventually if we can get above this 55. But more importantly, I don't know what the reason is going to be, but technically, if it can blast above 55, then it's moving to 60 pretty quickly. But we have earnings coming out here very soon. It's not an earnings play, but it's a longer-term play that just happens. Earnings could be a catalyst. Who knows? Maybe they surprise and they have good news for once. You never know. You just never know what's going to happen.
Okay. All right. So bottom line is technically you're looking at a breakthrough 55 as a way to release some of this consolidation energy and get a move to $60. All right. Makes sense. Simple enough. Thank you, Alan. Appreciate it, sir.
Thanks.
Alan Nuttman, Chief Market Strategist at bullseyeoption.com. Let's get back to